Good afternoon, welcome to Market Wrap number 221. Stuart Williamson here at the helm. This week, a couple of simple things. Why do people actually buy property? And the report from JLL, Jones Lang LaSalle, on the big six cities and what's going on there. Now, you say, why do people buy property? It comes to mind because I was sitting, I think having a glass of wine last night, watching some TV, and my daughter phoned and she said she wanted to perhaps buy a house in the university town where she's at. And we have a chat about it, and I asked her what she was looking for and what she would like. It dawned on me that people do buy for strange reasons. I mean, hers wasn't at all clinical because she'd never done it before. So it was very much a heart decision she was looking at. And I said to her, if it's an investment property you're not going to live in forever, then it should be a head decision. And where can you make money and how can you do that? And I sort of went through with her some of the points to look for, which is what we always look for, which is PIEs, population growth, infrastructure and employment growth. And I thought, well, I'll do a bit more research. And I went onto Reddit. And Reddit says, the question was, why do so many people want a property empire? And I'll quote from it. It's seen as a safe investment. Many people don't fully understand the stock market or other assets, so they often choose property or a cash ISA for their savings. Property is also a tangible asset. Unlike shares, you can't go down and ask the local Tesco for your shares back, but you can live in a house, you can look at it, you can see that it's really actual something, and people like that. Secondly, property offers a form of passive income that's easier to grasp. So unlike investing in the market, which can be complex and you have to be managed, and I'm not saying property doesn't have to be managed. The most important thing in buying a property is getting a good tenant and getting a good agent to manage it. So because it can be difficult, but it is a good asset class, and people do like to get the passive income from it. It's a small country, the UK, with a quite limited supply of property, so therefore it's always going to be in demand, and that's what people view it as. Demand is constant, and with immigration the way it is, it's going up. So that was on Reddit, and that's what people were saying about why they thought property was a good investment. So I tried to relay that to my daughter. Not sure if it worked or not. We'll see this Saturday when she goes around and does some viewings. Now, the JLL Big Six residential report, basically they look at the big six cities, which are Birmingham, Bristol, Edinburgh, Glasgow, Leeds and Manchester, outside of London, and they assess the different pressures and potential success stories in them. The overview is, interest rates have been perceptionally quite high, so that has had an effect on the market growing. So the price growth is quite flat across virtually all the cities, with the exception of Glasgow and Leeds, who were the cheapest, and they've gone up the most. So that's pretty indicative of buy where is value for money. You don't necessarily have to buy where is most expensive. Other rental market trends, demand remains strong, particularly in city centres. It's been driven by young professionals who want that vibrant lifestyle. And that goes back to the concept of the 15-minute city. In a build to rent has been very successful in Europe and in the US, because people want to live 15 minutes from where they work, from where their kids are at school, from where they can eat a Michelin-star restaurant, where they can get some entertainment, where they can go to some concerts. It's all got to be within 15 minutes. And modern city centres like Manchester, Birmingham are offering that now, and that's reflected in the growth we're seeing there. The actual rental growth itself has moderated this year. It's only at 6.6% for the annum, but it's still quite strong for those. It's a great bit of research on population growth, and I'll read this to quote it exactly right. They expect the 10-year population growth in Manchester to be 7.8%, in Edinburgh 8.5%. All the figures are high percentage growths. And I know a lot of people say that we have the highest retention rate of uni students after they've finished uni. A lot of cities say that, but it does seem to be the case in these top six cities, is that the uni students stay and people move in to be part of that. On the sales side, Birmingham is expected to lead the big six in the sales market performance. JLL expect Birmingham to grow by 19.9% over the next 5 years. On the rental market, again, as I said, it's a city focus. The BTR, build to rent market, is a real growing area, which we should see a lot of institutional investors coming into those locations. Birmingham and Edinburgh are expected to be the top rental markets, with 22% increase in rents over the next 5 years. Overall, the rental outlook is 19% across all of the big cities. It's quite extraordinary, really. We talk about what's going on in the marketplace. This is research that's come from JLL. Yes, it might be a little bit biased because of what they're trying to achieve, but it is quite phenomenal. If you're going to buy, therefore, buy somewhere where we have pies, as I say, population growth, infrastructure, employment growth. And a good measure of that is the 10-year forecast for gross value add for these cities. In Birmingham, it's 14%, 14% in Bristol, Edinburgh, 16% in Glasgow, 14% in Leeds, and the GVA for Manchester is 21.1%. That is amazing. I mean, when the BBC went to Salford Quays, sort of 12, 13 years ago, Manchester took off, and it seems like Manchester, I thought myself, had run out of steam and stopped performing, but it's not, and it's got more further growth in the future. Obviously, Manchester is full of Mancunians, which is not perfect in anyone's book, but the same could be said of Leeds, full of West Yorkshire types like me, or Brummies in Birmingham. But the point is, the underlying fundamentals are very strong. And if you can buy a 2-bed, 2-bath with a balcony for say £330,000, £320,000 in any of those locations, you get a rental yield that's going up every year by 10% plus you get 19% growth in the actual value of the property. It's a great buying opportunity. Have a look if you can. We do some notes at the bottom if you wish, and ask for a copy of the report. I'm very happy to send that out to you. Please do ask any questions, but it's a phenomenal big six piece of research. There's a lot more in it than I've gone through, because obviously time doesn't allow that. But there we go. That's the market wrap for this week. Hope you did enjoy. Please do comment. Please like. I think we're up to about 74% of people who are actually subscribing now, who read this. Make an effort. Don't be lazy. Thanks very much. Bye-bye.